Good day, traders. My name is George Nyabadza. I trust you are well. Welcome to my weekly walkthrough charts using price action. This week, I am walking through cable pound USD. So we're going to go through it right now. Now, remember, I primarily trade off the 5-minute charts. I'm talking about indexes specifically, the ones that I trade. I'm trading NASDAQ 100, DAX 30, and UK 100. And I trade those off the 5-minute. Now, while I'm doing that, because things can get pretty hectic, in indexes, especially the open, I have other markets on the 15-minute chart. One of them is cable. So we're going to go through it on the 15-minute chart. Now, remember, markets are fractal. So whatever patterns you see on the 15, you can see on the daily, you can see on the monthly, weekly, 5 minutes. So it really does not matter where you trade or which time frame you trade off. Same strategies that I talk about in my course. And remember, the most important thing is that the market never gives you things one by one. It just throws it at you. So we have to become craftsmen, and craftsman means we should be able to trade in all kinds of price action, looking out for our strategies. So things I'm going to go through, you are pretty familiar with from the courses that I have taken you through. It's all about price action. All right. And if you want to find out more, of course, just drop us a note in the chat box and please feel free to ask questions. So this was cable for the whole day, 15 minutes on Monday, 2nd of June. Just depends when you'd have come to the market. Now you could see that the opportunities to make money really were easily here. This was just looking at the time frame, 6:30 MT4 time. Okay, from that time all the way up to just after the London Open, good breakout. You know, the market can do moves at any time. The point here I'm going to talk through as we go through is that it doesn't matter what time frame you trade or which sessions you trade, right? You just have to be consistently in the market in the times you've allocated yourself and see what opportunities come up for you. So had you been in Asian session, you'd have woken up and you would have seen that trade range. Now, the one thing that I'm not putting for the sake of speed, guys, is high of yesterday, low of yesterday. Remember, I always have those on my charts. So you need to put those in yourself and be aware of those key levels. So a bit of a trading range with a bull breakout. When I see that kind of candle, I always want to buy that candle and put a stop at a technical level. So beneath the candle, but I look to the left, that's where my stop would have been. And wanted to see, hopefully, get a lot more. But I'm always managing my trade. So if you took that trade, and this is a principle I'll be talking throughout to say, you got to a measured move, whatever the case may be. So I may not do it all the time for the sake of time, but you need to be aware of this thing. So if you took that, that's where you're hoping the market gets to, of course, measured move, right? Eventually got there, but we didn't get there on this move. So, I probably would have tightened my stop along the way, maybe exited on this reversal, which is absolutely fantastic because it's another one of our patterns. Leg one, there is the first leg of the move. And there is a second leg of the move. Okay, I've moved this, so it's a little bit funny. Okay. So leg one, you always look for these hidden levels. Leg one, pullback, leg two. The quickest profit target was there. That's exactly what the market did. And the guys were scalping based on that. Once they see that failed reversal, they get out because we've reached leg one, pullback, leg two. We didn't get to the bull breakout. That will be the next profit level, but that's perfectly fine. If you had decided to take breakout, pullback, high one trade, above a trend candle like that, you have to be aware, of course, of the leg one, leg two, and the measured move. And when it starts to fail, get out. In this case, you'll be able to get out just at break even or maybe slightly, which is perfectly fine. From that, of course, bears, I'm saying, of course, we can see it. I have 2 EMAs here, 10 EMA, which I use to see the strength of the trend, and 20 EMA, of course, when the pullback, gets to that and the market breaks beneath, I start to think that we're in a trading range where the market is reversing. Like here, broke beneath the 10 EMA, a good breakout candle for the bears. They obviously wanted follow through beneath that, but if you decided to sell that, in any case, the reason you're selling that is you're hoping that the market gets down to the lows, down in lows of the day. But of course, got to be aware of this breakout because that level can get tested. In any case, we didn't get there. So if you took that and you saw that, you have to get out pretty quickly, which is perfectly fine, right? You could have waited for another candle and not got in. But if you took that and you probably saying to yourself, okay, I take that trade and I've got my stop above here. I'm hoping that we get to these levels here. I'm aware of that, but the market turns there, you get out. Then, get a higher low after that bull breakout. Good for the bulls. And you can start to buy anywhere in here. Okay. Hoping to get to that measured move, which we did. Now, if you're going away, like I always say, if you're going away, you can put your take profit in. Either that measured move or just below. Just below would be, at that high. Buying here, you'd have taken your profit there. But if you're in the market, stay, right? Don't bank too quickly because there are other measured moves ahead. There's a measured move for a breakout above the trading range. Then, of course, up there, you could take your profits. As we start to go sideways, I would. The market is reversing, or just tighten your stop and see what happens. You have been stopped out. So pretty good in that morning session for this market. And then we just ended up in a trading range. If you like trading ranges, good opportunity. I don't mind trading ranges, provided I can see that there's an opportunity for me to get to the next high, at least get a 1-to-1. So that would have been a decent one to buy. Now, remember, this is late in the day. So I'm not up 24 hours. I'm just showing you the opportunities. So you could have taken that quite nicely. The market's going to close. I don't carry trades through. So you'd have to close some of them pretty quickly. We have a spike channel that is perfectly fine. And, bulls got what they got. So if you really push it to the end of the day, you got to get out, I don't see any merit if you're trading during the day to hold on to your charts just because you're up at that time. And a lot of things happen at the end and the open, so no need to go through that stress. So next day, remember, you'd put your highs and lows, etc. Open with a trading range. The bull's not strong bit of a tail here, but that would have been worthwhile to take. You don't know what's going to happen. You can take that. Of course, I would put a stop down here if you're taking that. We're hoping at least to get a 1-to-1 in whatever the high of yesterday was, which is that. Good follow through, on that first candle. Then we get dodges. So we've got a bit of a wedge, 1, 2, 3. Whenever I see a wedge, I want to tighten my stop because I don't know what's going to happen, but I know that the bulls have tried to do something 3 times and they failed. So bears at that level may want to come through. So taking that, at least stop should be here at break even. If you're quick enough, it should be there. If not, that's fine. Keep it there. You get out break even, and then you wait. There's nothing for me to do here. I wouldn't do that. Not straight into the low. When I wait till I get beneath the low, then try and sell beneath here, which would be good. Now I'm trying to sell a breakout. Breakout beneath that level. You can try and sell that. Not triggered. If I don't get triggered, I say not triggered. I would have wanted to see the market going beneath. But, if you do sell and you get triggered slightly for whatever reason, that's perfectly fine. You keep your stops going to be up there. And then you get a breakout public low one as we start to go a little bit lower. Tighten your stop. You could try and sell that as well. If you can get in, that's fine. On the premise that the bears, they've got that breakout. They've got the pullback. So breakout, pullback, you're going to sell the pullback, beneath the breakout beneath here, hoping that you get there. And of course, you collapse a little bit further, but you're aware of the measured moves. So when you get here, start to go sideways, you tighten your stops. Interesting enough, look at this. Again, good opportunities, in the Asian session, London session, US session, nothing much for cable, pretty much of a dog. When I say nothing much, look at it. Even if you were trying to trade as a trading range, where is the entry? There's no clean entry here. At the top, we didn't get to test the top. So there's nothing much more to do here. Just kind of watch this and leave it for the day, and look at other markets. Or if that's all you're trading, doesn't matter. Just leave it. Okay, in the morning of the next day, bulls again, almost that pattern, similar pattern we almost had on Monday, but much smaller, of course, in terms of the trading range, in terms of the size of the candles. But that's fine. Bull breakout above that, you can try and buy that. Not triggered. When I don't get triggered, the next candle, I just want to get out and wait. Low test, widen the boost, control that, get another follow through. You can buy that if you want, but your stop is going to come all the way down to here at the very least, where the breakout started. That's a problem. If the bulls were strong, I should have been at least bullish, but no problem taking that as long as you can manage your trades. Stop here, tighten the stop. You would have gotten out a little bit of a loss here if you'd taken that trade. A little bit, at least half. Okay. But if you trade in price action on the lower time frame, anything below like the hourly, you got to adjust your stop, right? You can't just watch and hope for things to put your stop here, get stopped out. That is perfectly fine. No other way to get in. Then we got that low, we got that low, we've got a wedge that is forming. A wedge forms. Okay, no opportunity for us to sell. We've got lows here, got lows here. From the wedge, from the lows that here, there's that low, very weak breakout by the bears. So you can see that bears are not strong. Try to break out. Again, they failed. So got a wedge attempt, tails at the bottom. Eventually get a bull candle. I could take that pretty easily. When I say pretty easily, at least I know if we get to the top of the trade range. So I'm taking the trade here. There is the stop you can put. That's appropriate. If you want a very conservative stop, you can go all the way down here. Still fine to put that there. If we turn there, at least you got one-to-one an opportunity to manage your trade. Get into the trade, tighten your stop, get to break even, and then manage it and see what to get. Get another higher low. Bull breakout, which is fantastic. Down here, lower highs, higher low, bit of a wedge. If you look from there, 1, 2, 3, or 1, 2, 3, that's all fine. Bulls attempt to break out. Tail is problem, and it's just kind of a bit messy. So I would let all of that go. Pretty frustrating if you watch this market. Nothing else to do until right at the end of the day. When I say nothing else to do, I don't want to buy here. I don't see all of this. I don't want to buy here. I got all these tails. Why aren't the bull strong enough? Then the next bull breakout I get is up here with a tail, nothing to do. Okay, and then it brings us all the way to Thursday. Okay, the 5th. Trading range, Asian session open. So, our Asian friends were not rewarded this time around. Didn't get any bull candle that you could have traded. Then from that trading range with a larger trading range and another trading range, tried to break out. Then we fell, collapsed, bit of a dog. Nothing to do when you see things like this. Just let it go. Really, when I say let it go, where would you sell? There's no way to sell. Where would you buy? You can't buy here because of that trading range. Just breaking above that pretty weak trading range. If you convinced yourself in the heat of the battle, which is perfectly fine, that, okay, I'm going to buy that because I think the bulls are going up. There is a trading range. Buying the breakout, your stop has to be beneath the trading range. You buy that, you see that, that's a bit of a weak one. You've got to pull your stop up when you're seeing that. The tail gives enough time to pull your stop out. You get stopped out, a little bit of a loss. You took the trade because you thought, well, bull breakout, good for the bulls, didn't get triggered there. I'm going to try to get here because we might keep going. We did go up, but there's a pullback and nothing for us to do. We didn't break out above this tail again and that tail, so I wouldn't do anything and just let it go. Then we come to Friday. Friday was non-farm payroll, which is this candle. On NFP day, I don't trade after the London Open. So an hour and a half into London session, I'm done, I'm gone. I don't want to worry about all the drama that comes with NFP. You might get good trends, bad trends, who cares? But up to then, I don't trade. So, I probably would have been trading up to the 11:30, about there. Okay. Anyway, let's have a look at it. Asian session. Trading range open. Not good enough bull breakout for us to trade. Went sideways, came back, tested the low, Okay, not enough room for us to trade. Went up again, no breakout. We come back again to the same low. Now we're attempting to break out beneath it. That's fantastic. I mean, pretty weak breakout. You know, if you're an aggressive trader, you're going to sell that. Put your stop above here. You're going to be aware that there is a measured move. Okay. So you take that, put your stop here, you get to the measured move. You've got to be alert for it. At least pull your stop down to here, take off some risk, break beneath it. I'll bring my stop to here, to the measured move, hoping for more. You might have been stopped out by spread here. It doesn't matter, but we end up with a bit of a trading range. You've got up, non-farm, nothing else to do. Good. Guys, I hope you enjoyed that. Now, having said that, I'm just going to close it here. Any questions, please pop them in the chat box and we can pick it up later. Okay, so name is George once again, and we shall catch up again. Take care, guys. Have a good one. Okay, bye-bye. Cheers.